Hey everyone, today we're going to look into petty cash funds.
Cash being a medium of exchange and a highly valued asset, most companies require basic control activities to monitor cash outflows. Most companies use what is called an authorized electronic transfer to do so. However, there are many cases when companies require small dollar purchases that need to be paid in cash. These purchases are mainly miscellaneous and small postage items. In these circumstances, when only a small amount of cash is needed, the process of writing a check is either not accepted or too burdensome. To handle such cases, petty cash funds are established. This process is divided into three activities: establishing the fund, making payments from the fund, and replenishing the fund. Companies choose to have a petty cash fund to eliminate multiple journal entries for small transactions. A company must decide how much they want in their petty cash fund. After deciding on the petty cash fund amount, it must be established on a journal entry. For example, for a $100 petty cash fund, we will debit petty cash fund and credit cash. This is essentially the company writing a check for the amount of the fund. This check is then given to a designated employee who is the custodian. The custodian is the one taking the check to the bank to get the cash to put into the petty cash box. When employees need to use petty cash for various purchases, they will either receive the cash from the custodian or employees can be reimbursed from their fund after they use their own money. Either way, it is required to give the receipt for the expenses back to the custodian. And as these payments are made from petty cash, no journal entries are required. However, the custodian is responsible for tracking the money used and the receipts returned. When the cash fund decreases, it must be replenished. This process is done when the custodian reconciles the petty cash fund by adding the total receipts and the remaining cash in the fund. If no errors were made, it should equal to the original petty cash fund amount. This is then entered into the journal entry. In the journal entry, each expense is recorded as a debit and cash is recorded as a credit. A check is then written to replenish the funds back to the original petty cash fund amount. This is also why cash is credited, not petty cash. Then the process repeats itself where the check is given to the custodian, who gives it to the bank to get the cash required. Sometimes there are discrepancies between the cash needed for replenishment and amount of receipts. In cases like this, the discrepancy amount is charged to an account called cash over and short. For example, if there was a shortage of $5, a debit of cash over and short must be added. And if there was an overage, cash over and short will be recorded as a credit. Afterwards, a check is then written for the amount needed to replenish the petty cash fund and the process starts again.